So step number one for the best risk management in Forex trading is understanding how much we want to risk per trade. In my opinion, the best money management strategy for Forex trading is to risk between 1 to 5% of your total trading capital per trade. Why? Simply because it gives you enough room and space to breathe. You won't be overexposed and you won't panic as much when the trade doesn't go your way. And trust me, losses will happen. It's unavoidable. It's how you manage the trade is really what makes the difference. The key to making money in Forex is staying cool and clear-headed when you do have that losing streak, because that's when you are the most vulnerable and emotional. You have to realize it's just part of the game, so stay focused. Right now, for all the beginners watching, you might be wondering, how do I figure out what 1 to 5% actually looks like? Well, my friend, it's easier than you think. You don't need to whip out a calculator every time. You can use online tools that do the work for you, and the best thing, they're free. For example, some great websites I love using is MyFXBook Position Size Calculator, or my personal favorite is BabyPip's Sizing Calculator. Let me show you a quick example. So let's say you got $1,000 in your trading account, and you want to risk 2% on a single trade. You select your stop loss amount, whichever it may be, so let's say 10 pips if we are scalping, click on calculate, and the amount of risk we are taking is $20 US. The position size calculator will tell you exactly what lot size you should be using for the risk you are taking. We can quickly change this up to 100 pips stop loss. Click on calculate, the amount of risk stays the same, however it tells you what lot size you should be using. And as we can see, 0.02 lot size is what it recommends. This tool is highly valuable because you will never be guessing or risking too much without knowing. Alright, moving on to step 2, let me introduce you to a Forex indicator that's pretty much your new best friend when it comes to risk management. And that is the average true range. Now, I love this indicator. It's like a Swiss Army knife of trading. It has everything you need. Most traders will use the ATR indicator just to set up their stop loss levels, which is totally fine. But it's kind of like using a Ferrari to drive down the street to get groceries. You're not really tapping into its full potential. Let me show you what I mean. The ATR by default measures the price movement over the past 14 days and gives you a number based on that. So for example, if it shows 0.300, that simply means that the average price movement is 30 pips. Now here's the magic. To protect this trade, you want to set up your stop loss double the average price movement. So in this case, it would be not 30 pips, but 60 pips. What we want to do now is open a position and add a stop loss of 60 pips. And we can do the same thing for take profit to make a level 1-to-1 risk reward. And as we can see, we never get stopped out and actually would have hit our take profit level. Now here's where things get interesting. Did you know the ATR is so good that it can help you predict market reversals and price continuations? It's like having a crystal ball minus the drama. Okay, going back to our previous GBP USD chart, right? We know that the price movement has been 30 pips, right? That was the average price movement that the ATR indicator has been telling us. It can be a little bit more, it can be a little bit less. What we want to do with this is double it, right? So if we double it to 60, let's say just over here, that's where the new day started. So we know that today, this has moved around 60 pips, right? That's now double the ATR indicator's range, right? Which means likely there's going to be a lot of sellers waiting because the market has been exhausted, right? There's a push, there's always an exhaustion back to the previous area of sensitivity, even when the market is trending towards the upside, as we can see just over here. So if we wanted to, we could now sell the trade. Look at this, short position just around here, 60 pips stop loss and 60 pip take profit, let's say, and let's see what could happen. And the market does dip down, nearly reaching our target profit level and then obviously stopping us out. But if you're pretty much here, 53 pips, you might have closed a portion of your trade position, moved your stop loss to entry. There's many different techniques as well, but that's not what we're talking about. We're talking about how you can spot trading reversals and market continuations, knowing the ATR's true limits. Funnily enough, I would have taken this trade anyway. Look at this. It's trending towards the upside, right? I would enter the trade just around here because he has moved from this top level to the bottom pretty much a little bit more than 60 pips, but pretty much in that range, right? Let's take a look. Around 74 pips, so it closed around 69. That's pretty much double my ATR limit. I could have started buying this trade just over here, and look at this, 60 one more time, and it would have been yet another profitable trade just by knowing the limits of the ATR indicator. Please tell me if I'm not the only one that thinks this is pretty damn cool. The ATR is not perfect, it's not some magic potion from the wizard's stash, right? It has its flaws, but this leads us perfectly to step 3, which is using other confirmation techniques to maximize your success rate and take your risk management trading to the next level. Now let me share with you a few of my favorite Forex tools that have helped me pass ProfM challenges and rank well above average in TradingView competitions. First, utilizing moving averages, and more importantly, understanding the trend. Here's why it matters. If the trend is moving up and you get a strong pullback down, let's say the ATR shows a breach of its usual market volatility, you might have a strong continuation opportunity on your hands. And the best part of all, it offers low risk. Why? Because you entered the trade on a favorable opportunity with momentum on your side. Next, let's talk about Fibonacci levels, another tool that traders love. Most people draw them between the recent high and low, but personally I like to zoom out a bit and draw them from the daily chart minimum. In my opinion, this gives me a stronger continuation and reversal opportunities, and once again pairing this with the ATR indicator keeps your risk management tight. Now, third tool is pivot points. Similar to fib levels, pivot points give you solid areas of support and resistance. Trading near these zones can offer excellent trading opportunities. Why? Because the market is simply not going to break through them right away. It's like trying to kick the door down, which is pretty damn fortified, right? It's going to take a lot of pressure and a lot of movement to break this level. Here's where it gets really exciting. Sometimes all these indicators line up. Seeing those two lines plus the moving averages is the golden opportunity, right? If it dips sharply and the moving averages are going up and it hits the monthly pivot line and the Fibonacci, do you think that's gonna stay? Hell no. Most likely there was a push, there was a retracement back. The retracement will happen, buy orders will get triggered inside that area of pivots and Fibonacci's, and you will get that instant push towards the upside. And trust me, if you get it right, sometimes it's over 100, 200, 300 pips, and this is where you make the big money in Forex trading. So yeah, the rock solid foundation for Forex risk management, moving averages, fib and pivot points gives you great entry and exit opportunities, reducing your risk and maximizing your gains. And let's be honest, who doesn't want to make more money in Forex? Before we wrap up, I want to take a quick second to invite each and every one of you to my Forex trading group. We are absolutely dominating the markets. We got tons of client reviews, tons of feedback, tons of results. Everything gets posted monthly. If you ever wanted to learn to trade Forex, use my strategies, then this is the group for you. And if you're hungry to learn more trading and want to become a better trader, you might want to watch this video next. Take care, Lions. Have a wonderful day. Stay safe and goodbye.